Hello and welcome to Switzer TV. I'm Peter Switzer. Thanks for joining us. On tonight's show, Junbei Liu will look at the sectors and the stocks that look set to head higher. And we also have a bit of a chat about Resmed. It's been sold off today, but is it actually a good buy at this point in time? And then Mike Gable of Fairmont Equities will look at 8 stocks that the analysts largely like, but do the charts give these stocks the big thumbs up or not? Let's now kick off with Junbei Liu of Tribeca Alpha Plus. Thanks for joining us, Junbei Liu.
Thank you for having me, Peter.
All right, the market's down today and a few stocks have been hit for a 6. And one, Resmed. Now, this is a stock that you and I have liked. We look really smart when it bounced back nicely, but it was challenged today. What's behind the challenge, and do you think it's another buying opportunity?
First of all, it's definitely another buying opportunity. The challenge is really, it's the same data, the study that was done by Eli Lilly, and the result we saw in April, and now just released more data in relation to those results. I think within those data, there is some indication that potentially there will be more reduction of patients across some of those areas that potential clients for Resmed products. Now, this is very early stage, as we all know, and then as we all know that this is at least 5-10 years away from even remotely affecting what addressable market might look like for Resmed, and we don't even know the regulation potential side effect of those drugs. So it's very early days of what is to come, and the investors really punishing Resmed share price by over 10%.
Do you think the market is oversensitive at the moment? Do you think the market is oversensitive?
Absolutely. I think it's the end of the financial year, and then we all had a really good year. And end of the quarter, end of the year, end of the 6 month for US investors. There's a lot of people taking money off the table.
I was asked today why Resmed has gone off the boil today, and I said, in simple terms, these drug trials suggest that diet drugs might work. Therefore, less fat people. Therefore, the diet drugs will give less fat people, less snoring problems. That's a problem for Resmed. It's a really long bow to draw, isn't it?
Absolutely. And then the data itself, that we've seen it before, compared to what we know yesterday to today, nothing's really changed.
Okay. Well, Wells Fargo in the US last week was saying they thought if there's rotation out of the high growth tech stocks we've seen, and I think the other tech stocks that haven't benefited from the AI uplifts and stuff like that, they'll do okay in the year or so ahead, but they're looking at the rotation out of tech. And 3 areas they like were materials, BHP and Rio types stocks, energy and healthcare. All right, and we've talked about healthcare with Resmed, and CSL's another one that's struggling because of the diet drugs.
Absolutely, great opportunity.
But Woodside, for example, the analysts really have a real big tick on where this share price can go. And I guess they're sort of saying fossil fuels are on the way up, but it's going to take a long time for them to go out. What's your view on energy stocks?
Look, I like energy stock, exactly like you said. They are on the way out, but there's less investment into the oil. And energy is actually a very important space for the growth of AI. With all that AI, we need data center. With data center, we need energy. So utility companies in the US actually has been rallying aggressively because we're running out of energy. How do you supply all these, the data center and then the demand of the AI? So I actually think they well placed just at this point. Because of the shorter end, oil prices keeps moving because of slowdown in global economic reality. But we don't have recessions, we don't have any of those, and China is slowly on the way up. So I do think that energy is reasonably placed.
Yeah, I came across a really interesting story. One of our financial planning clients actually takes the stuff that's left over from one of the big power stations in the Hunter, and he's converting the leftover stuff into lightweight building blocks. And he also was saying a lot of that leftover stuff from the coal-fired power stations create carbon pellets, which they're selling to farmers for cultivating the
Wow.
soil. So lots of these companies aren't going to just disappear because their usual core business is affected. They're going to diversify, and it's going to take a long time for us to get off coal and other energy.
Absolutely. And then investors tend to assume that in a straight line that these companies won't reinvent themselves in
Yeah.
creating other products.
Yeah.
So many companies we know have reinvented themselves. Look at Apple. It went bankrupt almost 3 times.
Yeah. Yeah.
And they reinvented. Look at it today. Well, it's a little bit tough, but still, look at what it could regenerate.
I guess coal companies could get into uranium and nuclear power.
They got a lot of cash flow coming through, that's for sure.
They have. Let's go to, and on that subject, Boss Energy, BOE, it's in the uranium space. Now, we know Paladin's gone for a big run. Is uranium anything you're interested in playing?
Yeah, it is, because I do see uranium as the whole important part of that whole energy complex.
Like a mix.
Yeah, absolutely. You have a bit of oil, traditional oil, you have uranium. Uranium over the long term, they have an important space in how the future energy or the energy transition might look like. And meanwhile, the supply to uranium is actually very, very tight. And as we know, those projects are very, very tightly controlled. Approval planning is very, very difficult. Takes a long time to come through. So those companies' asset become very, very valuable. Recently, because of oil price weakness and a few other production issues, so BOE has share price has tumbled a little bit. But I do think it's a good opportunity to hold this one.
And I guess the argument is, even if we don't agree to doing uranium nuclear power plants here, there's lots of places in the world where they are, and we can sell stuff overseas.
Yeah, absolutely. Look, Australia doesn't even come into the supply and demand at the moment. At the moment, there's a very, very tight supply shortfall. So, we see a huge amount of demand just for the next few years.
Okay, here's a company I've always liked, and it doesn't fall into the energy or the material space, and that is Audinate. Recently, the share price has come off the boil, but I do like the technology. But what's your thinking about the recent sell-off of Audinate?
I think it's a great company. To be quite frank, it's done incredibly well since COVID. Share price having a bit of consolidation at the moment.
Yeah.
I think it's one of its kind. It has the best technology and has the best access to all these large clients, and it's been growing incredibly well. It hasn't been another company like it in that particular space. So to me, it's a company they certainly should.
Yeah, it doesn't seem to have an international rival. It competes with Bluetooth, but Bluetooth is like a cooperative business, and Audinate is being picked up by lots of big organisations like big rock cottons and things like that. They use the Audinate software.
That's right. And I do think this is one thing with the share market. Often when they see a new entrant and others, they tend to overblow what it could do. A bit like what happened to Resmed, the weight loss drug. And with this one, they just assume that Audinate won't compete, won't aggressive, because being the market incumbent, you have the highest market share, you have the best access to clients, you have the best cash flow to support the innovation. So theoretically, it should be the incumbent that has the best chance in innovating and growing into all these other areas. So for competitor, it's actually quite difficult.
All right, last question. August to October often can be challenging for the market. So I wouldn't be surprised to see a pullback. But I also think out there hovering will be the fact that the US could cut interest rates in September, and we will see some important inflation data both here and in the US this week. What's your best guess about what will happen for the stock market for the year, for the 12 months going forward?
Yeah, I think the next 6 months, as you said, will be a little bit volatile because share market has done really well, and then heading into August now, we know the economic pulse is slowing down. Same as in the US and here in Australia, we will have earnings, a little bit of earnings downgrade, not because the economy is not slowing that fast, but it is slowing, particularly the consumer-facing names. That you will have a bit of earnings downgrade, and that will mark the trough for consumer companies. Now, heading into the towards the December and so, we do think because of the US election, the rate cut potentially either to be very end of this year, this is in the US, or early next year. But regardless, it's coming. So, before December, I do think the share market might be a bit volatile, might be a little bit of a sell-off around that August and September time. I do think it's harder for Fed to cut in September because of election, too much political noise. But then it is really your buying opportunity, because from here on, we are entering into a rate cut cycle. This is normally phenomenal for the share market. At the same time, economy is reasonably supported. We got, particularly here in Australia, we got the tourism number potentially coming back a little bit more. We've got our consumer get a bit of tax cut supporting them. So there's quite a lot of positive things coming through. And then we head into the election year next year as well. Potentially a bit more promises for for different support for consumers. So so it does look like it will be second half financial year weighted sort of share market.
So when you see all those scary headlines by people who invariably are wrong, you don't lose any sleep at night.
I will be buying more.
Okay. That's Junbei Liu of Tribeca Alpha Plus.
Thank you.
And that was Junbei Liu of Tribeca Alpha Plus. And that's the show for the people who aren't subscribers. For those who are subscribers, we're now going to catch up with Mike Gable. And he's going to look at a number of stocks that the analysts really like, but do the charts vindicate their positivity?